Hey everyone, so 18 days ago, I purchased a brand new stock. Many of you know this because you follow me on Twitter, and just 18 days ago, I added a new position to my portfolio. If you fast forward to today, 18 days later, I'm already up 50%. I kid you not, this stock has appreciated 50% in less than 1 month. And so I want to share my experience in the video today. I want to share some insights on the company, what I learned about investing from this experience. And I am talking about Dutch Bros, ticker BROS. This is an IPO stock. It's a very rare non-dividend stock that I include in my portfolio, but it's a company I feel very passionately about. I love the company. I think there's a lot of growth ahead. And so I want to dig into some of the details today about this particular position, which is now about almost 1% of my portfolio in size because it has appreciated so quickly. All right, everyone, let's get started with a really exciting video. Welcome to PPC Ian. This is dividend stock investing for everyone. All right, everyone. So in the video today, I want to go through Dutch Bros and their business and their S1, which is their IPO filing. I want to go through some insights there, and then I'm going to jump into my own Excel analysis. If you enjoy my videos, by the way, don't forget to subscribe because I have new videos on the way all the time. It's the best way you can thank me. Also, don't forget to smash that like button. All right, everyone. So as you can see on the screen right now, I want to share something about Dutch Bros and their business model. You can see that this is a coffee shop. And what's so interesting about Dutch Bros is it's a drive-through. And so you can go there, and at some of their restaurants in very urban areas, like in downtown areas, you can actually go inside the store. But their bread and butter business model is you actually drive through, get your coffee, get your refreshment, your smoothie, your energy drink, and you go. And even at their drive-ups, they will have a window if you want to park your car and you want to step out and get your refreshment and then go. But again, the bread and butter of this business model is driving through their drive-through locations. And so they sit in the middle of this matrix where you have coffee shops, about 37,000 of them, 13,500 plus of drive-throughs. You have convenience stores, 150,000 plus, and you have quick service stores or restaurants, 204,000 of those. Quick service are going to be restaurants like McDonald's, which is another stock that I own and love. And so Dutch Bros sits right in the middle of this Venn diagram. Currently, they have 471 stores, but they want to expand to 4,000 plus. 471 stores is nothing. They are really small right now. You'll see in a few slides that they're mainly focused right now on the Western United States, but they're going to expand more and more. They are opening up new stores all the time. And that's why they IPO'd, I think, to raise funds and to position themselves to accelerate their growth, which I think is really important during this stage of the journey. If you've been following me a while, you know that I love this sector of investments. I own Starbucks. I own McDonald's. I even own Alimentation Couche-Tard, which is a Canadian company that operates the Circle K convenience stores. So I am not new to this sector. I love this sector. I think it's an important sector. I like to invest in this sector. So let's keep going. Check it out on the screen right now. By the way, these are all images and information I got from their S1. They're a little pixelated, but that's just how they came through in the S1. And so bear with me there. That's not an editing error on my part, but that's the best I could do when I was taking screen captures from the S1. You can see their product mix. Now, I go there for their iced mocha. I also enjoy the muffin tops, which is a snack they have, a real delicious sweet. Now, those muffin tops are best shared because they are full of calories. But I go there, honestly, for their iced coffee, which is only 16% of their product mix. Their big blockbuster product is actually the Blue Rebel, which is 24% of their business. This is an energy drink, and blended smoothies comes in number 2 at 18%. And so this is a company that has disrupted this quick serve kind of coffee industry by introducing new products. And they've also introduced it in a way where the broistas, if you will, they're really just unique and kind, and you go there, people are nice to you, you leave with a smile on your face, and so it's a very special kind of environment at Dutch Bros for the customer. And a lot of people, I think they go there not only for the drinks, but for that good cheer. Now, you can see their average sales by day. What's so surprising is a big chunk of this is actually midday, 12 to 4 p.m. And then not surprisingly, a lot of it is in the morning, kind of those work hours, 9 to 12, and even early morning as well. And so that's their business mix. Again, it's a little bit different than Starbucks, if you will. Starbucks, yes, a lot of people are ordering on their mobile app. They're getting it, they're going it, they're grabbing to go. But also a big component of their business now that the pandemic is over, thankfully, is folks like to go to Starbucks, sit down and get out their laptop, do some work, or they go there with friends to chit chat or read a book. Whereas Dutch Bros, it's all about the quick kind of experience of getting in, getting out, but having a good time, and the broistas being really, really nice to you and offering a unique experience. And they kind of have rock and roll music really loud. It's just a different kind of vibe at Dutch Bros. And I would say Dutch Bros, Starbucks can coexist. They each will have their own niche in the market. Let's keep going. Check it out right now in front of you. I want to go through their business just a little bit more. Systemwide shops, you can see here again, Western United States so far. Now, this is as of June 30th, 2021. And so they started in Oregon. And so Oregon is where they have the most shops. And then number 2 is California, so on and so forth. There is a lot of room for this company to expand, not only within the states they're in already, but across the United States. If you've ever been to Dutch Bros, by the way, let us all know in the comments below what you think about Dutch Bros. What I've always noticed with Dutch Bros is, there's always a line of cars around the block. It's very, very busy. And so what they're starting to find is they can open a new Dutch Bros not too far away because the lines of cars are so long. And so there's more than enough demand to open these shops. Something else I would say is there's a lot less overhead than Starbucks, because Starbucks has to put in a lot of their cafes where you sit down, huge amount of tenant improvements to that real estate, which costs Starbucks a lot of money. Whereas with Dutch Bros, they don't have to make too many tenant improvements because the vast majority of their stores are drive-thrus or with just a counter you walk up to and they have some chairs, some seating outside. And so it's a much more streamlined business from a real estate tenant improvement standpoint. We'll talk more about that later. I want to keep going. Check it out in front of you right now. One thing that I think is so important with Dutch Bros is the ownership structure is really confusing. There's all these different classes of shares, Class A, Class B, C, D, and there's also units as well. And the units are different than common stock. And so there's 2 companies, Dutch Bros Inc., that's the overlying parent company. That's what the public stock market investors in Class A common stock, like I own, invest in. And then there's the Dutch Bros OpCo, which sits below it, which is actually operated as a real estate company. And it's not, I forget the classification of it, but I think it might be an LLC if I remember correctly. And so it has a real estate structure to it. And so there's K1s and such for people who invest in that operating company, which would basically be the founder and the big investors who invested in this thing before it went public. But I'll tell you, the number one thing that a lot of investors get wrong with this company is not understanding this chart and not understanding the different classes of shares and not understanding how many shares are outstanding if it's fully diluted. The market cap, for example, on Yahoo Finance, in my opinion, and I could be wrong, but based on my due diligence, is actually wrong. And that's something that threw me off about Dutch Bros from the beginning. We'll talk about that a little bit more as I get into my analysis later in the video today, but this is a takeaway for anyone investing in IPO stocks. By the way, I want to give a shout out to my friend, the IPO Nerd. This is my friend Jose. I'll link to him in the pinned comment below. He covered Dutch Bros on his channel as they were going through the IPO process. Make sure to check him out. Jose, let me know in the comments below if you're going to buy shares. This thing just keeps going up. It's crazy. I want to buy some more shares, but I'm probably not buying at these levels. I'm going to wait for it to go down a bit before I do that. But anyway, what I want to do now is go into some of the ownership structure just a little bit more because this thing is confusing. But again, that's actually why I was doing the shout out to Jose at the IPO Nerd. I'll tell you, as a dividend stock investor, I got things easy a lot of the time. I got years or decades of data that I can pour through. With these IPO stocks, it's difficult to analyze them because the data is all over the map. There's so much going on. The ownership structure is kind of wacky. And so that's just one of the insights I want to share with the community. And shout out to my friend Jose because it's so difficult to analyze these IPO stocks. Even I made a mistake with this one as I was first analyzing it. Let's keep going. Check it out on the screen right now. And so the next thing that I want to share is more from their S1. It just goes to show that Class A common stock is about 21 million shares. And then there's some additional shares that could go out if the underwriters want to exercise their options, so on and so forth. But the key number here that is buried that most people don't understand is that basically Class A common stock outstanding after this offering, assuming redemption of all Class A common units. And again, common units are different than common stock. The common units are the ones in that LLC, the OpCo, by the continuing members and the conversion of all shares of Class D common stock, blah, blah, blah. 112,162 shares. That's how many shares there really are. So if you want to understand the real market capitalization of this company, in my opinion, you take that many shares, you multiply by the price per share, you get the market cap, which is actually $11 billion right now, which is a lot different than the kind of $3 billion range listed on Yahoo Finance. And that's something that fooled me from the beginning on this thing, is I thought the market cap was really low because that's what I was seeing online. But no, that's not the case when I look into the S1 and I actually uncover all the shares. And I think the reasons the data aggregators have the data wrong is because there's all these different types of shares, and a lot of them aren't part of the publicly traded common stock. And this is why IPO investing is so difficult. Let's keep going. Check it out on the screen right now. And so the next thing I want to share is their income statement. And so again, you have the OpCo and then you have Dutch Bros Inc. Dutch Bros Inc. is the parent company. OpCo sits below it. I don't want to go into this in too much detail other than looking at the growth. If you just look at revenue, it's jumping substantially year over year. 2020 versus 19, it goes from 238 million to 327 million. And you can see in the 6 months range ended June 30th, 2020 versus 2021, we're going from 150.8 million to 228 million. Just fascinating. And quite frankly, why I'm focusing so much on sales here is it's difficult to focus on anything else. While this company is 30 years old, with a company at this stage in their life cycle just IPOing, sales is everything. I know the earnings will follow because I know that Starbucks makes a ton of money, and I know these guys have a lot less overhead than Starbucks because they don't have the tenant improvements inside their shops, and they've got lines around the block of people driving through and buying their product, and their product is retailing for pretty expensive prices, I would say comparable to Starbucks levels. And so that's why I'm not too worried about earnings at this point. What I'm worried about is them scaling revenue and getting a stronghold on those 4,000 stores that they'd like to. Now, one thing I would say that I saw here is their cost of sales jump when you look at Dutch Bros Inc. pro forma versus the OpCo. And I didn't really understand, why does the pro forma have SG&A going up so much? Maybe they're just kind of factoring in what's going to happen as they go public and how there's going to be more overhead as a publicly traded company, but maybe that overhead in the long run really pays off because they are expanding so darn quickly. And having 400 some odd stores is not the end game for this company. I don't even think having 4,000 stores is the end game for this company. This company has a lot of room to run. Anyway, that's the income statement. I actually want to pause here and I want to share an important anecdote. I started off this video with a pretty aggressive headline that I'm up 50% in 18 days, and it's true, I am. But when I say I'm up, that's just capital appreciation. Keep in mind, I'm a long-term investor. I did that statement up front to capture everyone's attention and because it's the truth. But what I want to share with all of you is I just did another video on Utz Brands Inc. and how I'm down 30% over the course of the year that I've owned this. I'll link to that in the pinned comment and in the description below. I just did a video on that, and I received a lot of kind of feedback from the community before I did that video that prompted me to do the video, that Ian, you made a mistake, or Ian, your analysis was off. Ian, you lost your touch, this and that. A lot of haters, if you will. And so the reason I did that video and I wanted to dig into the fundamentals in that video is really to explain that in a 1-year period of time, the stock market is a voting machine. It's a weighing machine when you look out into the decades. This is a famous Benjamin Graham quote, the mentor of Warren Buffett. And so same thing goes for Dutch Bros. Being down on Utz 30% doesn't make me a bad investor. Being up 50% on Dutch Bros in 18 days doesn't make me a good investor either. The most important thing to remember with investing is to keep the emotions out of it and to remember in the short run, it really is a voting machine. And so whether I'm up 50% in 18 days or I'm down 30% on Utz in 1 year, it doesn't mean anything. It really doesn't. I'm looking out into the decades. I'm a long-term investor, and I think that's something so important for this community here to remember, whether we're investing in dividend stocks, IPO stocks, whatever. Investors being up or down these types of wild fluctuations in short periods of time doesn't make us better or worse investors. It just means nothing because it's a voting machine in the short run. Now, I hope Utz comes back down because I'd like to buy more. That being said, with IPO stocks like this, I tend to go strong at the beginning because I know that they're so volatile. And so with Dutch Bros, I bought enough up front to be happy. And now it's right around 1% of the portfolio. And so I'm fine with that. Anyway, let's keep going. Check it out on the screen right now. I want to cover some more territory. Next, what I want to do is quickly share a balance sheet snapshot. Now, this is a abbreviated balance sheet, but you can see from this company that cash and cash equivalents, you can see their total assets. You can see working capital, liabilities, so on and so forth. The main thing I want to show here is that the assets for the pro forma, at least, outweigh the liabilities. And so I think that's something good to see. And I think that's probably as a function of them raising capital from the IPO that they're able to bolster the assets on their balance sheet. Now let's keep going. Check it out on the screen right now. I want to show you some tenant improvements. And so when you look at this company, as of 2020, they have $112 million worth of buildings, $4 million of land, and you can see here equipment and fixtures, $36 million, so on and so forth. Leasehold improvements, $15 million. That's really important. Construction in progress, $15 million. So on and so forth. And so you kind of get a sense here that equipment and fixtures, leasehold improvements, construction in process, it's not astronomical as a kind of comparison to the overall buildings, property, land, and just in general, it's not huge numbers as a function of this company. Keep in mind, this is, a $10 billion, $11 billion company, and that's what we're looking at in terms of tenant improvements. Now, I want to share on the screen right now Starbucks, by contrast. So that's about 66 million or so of leasehold improvements, construction in process, and equipment and fixtures. But as you can see on the screen now, let's just look at Starbucks. These guys have about 46 million of land, 691 million of buildings, but wow, look at the leasehold improvements here. We have basically $8 billion of leasehold improvements, store equipment, $2.6 billion, roasting equipment, $769 million, fixtures and furniture, $1.8 billion nearly, work in progress, $358 million. And so you get the picture here when I compare Dutch Bros versus Starbucks. Of course, Starbucks is going to have a bigger number, but also just proportionately speaking to the overall business. What I see here as an investor, I think Starbucks has a little bit more operating overhead than a company like Dutch Bros, but they also have a different business model. Starbucks, yes, is migrating more to drive-thrus, but most of those drive-thrus still have an in-store experience, and customers like myself cherish the in-store experience. I would say if I'm in a mood to get something quickly, I prefer Dutch Bros because I hate to say it, Starbucks, but I actually enjoy the beverages there a little bit more. But if I'm in the mood to sit down and work, I go to Starbucks because the beverages are still great and the snacks at Starbucks are really good too, like the cheese plate, fruit plate, this and that while I'm sitting down and working at my computer. Let's keep going. Check it out on the screen right now. And so the next thing I want to share with all of you is that cash flows, as I promised. And so on cash flows, you can see for the year ended 2020, they are doing a net cash flow from operating activities of $53 million. You can see that they're investing quite a bit, $45 million of that. You have some financing stuff going on. And so there's generally speaking, a net increase in cash. Although the 6 months ended June 30th of 2021, there was a decrease in cash. And you can see that's because they're doing some stuff with financing and, again, investing. And so what I would expect with this business going forward is they're going to be running a fine line on cash flow for a while. I don't think they're going to be stockpiling a ton of cash. I think what they're going to be doing is reinvesting back in the business, and that's what I would hope they would do to skyrocket their revenue. And honestly, I'm going to plant the seed now. The valuation on this thing is extreme, and I think that to catch up even with the current valuation, we're probably looking a few years out. But 10 years out from now, if they keep going the way they are, I think this could be a $30 billion company, and it's sitting about $11 billion right now. And so I like that. And so I want to share some more stuff. As you can see on the screen in front of you right now, let's look at system-wide sales. This is really exciting. And so many people get this wrong with the restaurant industry. But one thing to keep in mind, the restaurant industry, especially with franchised stores, is basically revenue is not the same as sales. Sales are the sales actually the customer putting money into the cash register or swiping their credit card or their app, whatnot. Revenue is what the company sees. And so when you actually have franchise stores, the franchise stores are receiving the sales, but then they pay a franchisee fee to the parent company, and the franchisee fee to the parent company, that's the revenue. And so what Dutch Bros does for us all to make things easy to analyze is they show system-wide sales. So these are sales across not only company-owned stores, but franchised stores as well. And so you can see how that's growing quickly over time. Now, one thing to keep in mind with Dutch Bros, they've stated that their business model over time is going to be migrating to more company stores than franchise stores because they want to keep their corporate culture alive. It's a very special experience there, and they want to keep that alive. I don't know if it's the right strategy or not, because on my analysis so far, it actually looks like the franchise stores are performing a little bit better on a revenue, kind of a unit revenue basis. We'll look at that a little bit later. That being said, you know what? I trust management here because they built something pretty amazing. Let's keep going. Check it out in front of you right now. This is just really quick, but they do not intend to pay dividends for the foreseeable future. No surprise there. It's a IPO company. The reason I bought this company is, one, it's honestly just a passion of mine. I love the coffee industry. I love this company, and I thought that I would buy some shares just to celebrate my passion for a world-class company that I'd like to see succeed. Also, though, I secretly hope for a dividend in the future. I'm talking 10, 20 years out, but 2021 is a year for me about investing in growth-oriented companies, and so this fit the persona of the types of companies I'm buying this year because they're not about short-term yield, they're about long-term yield on cost. We'll see if this thing pays a dividend 20 years from now. I hope so. Check it out on the screen right now. I don't need to go into too many details, but they did pay some distributions to their LLC OpCo unit owners, as you can read in the fine print there. And so they are not foreign to dividends. They know all about dividends. It's just as it pertains to the common stock and going through this IPO, they're not going to be paying dividends anytime soon. And if I did have a critique of the company, it seems like they're using a lot of the IPO monies to pay dividends to the OpCo unit holders. And so is that the best use of the IPO funds? Hey, the company's 30 years old, and I think a lot of these folks have been waiting a long time for some kind of payday. And I think the company is trying to incentivize these folks not to sell their shares, but to hold shares for the long term. And so maybe that was a good move from that standpoint. There's pros and cons. And now one more thing I wanted to share, as you can see in front of you right now, is there are some risks with this company. One is an extreme valuation, especially now that it's gone up 50% since I bought it 18 days ago. But also they say they've identified a material weakness in internal control over financial reporting. Well, that really does not sound too good. And so as you go through these S1s, they're just covered in all kinds of risks. And this is why IPO investing is so much more difficult than dividend investing when I have mounds of trustworthy data to rely upon. But hopefully that material weakness is resolved. I don't know what it is. That's just something I uncovered in the S1. So I want to jump now into my analysis, my Excel spreadsheet. Check it out in front of you right now. This is a little bit different than the analysis I typically share here on my channel. So I just remind everyone at the top that this is their 30th year of operation. I bought this at $45.64 on the 4th of October. Now on the 22nd of October, it's at $68.86. So I'm up 50.9% in only 18 days. But I put the word gain in quotations because, again, this is just short-term movement. Does this make me a good investor? No, doesn't matter. Just as UT's going down doesn't make me a bad investor. This is just short-term. In the scheme of things, doesn't matter. And so the market cap on Yahoo Finance right now is $3.4 billion, but the actual market cap that I estimate they have is $11.36 billion. That's quite a discrepancy. And so honestly, when I bought this company, it was trading at a $2 billion market cap on Yahoo Finance. And I thought I was actually getting a reasonable value at that time because I thought that was the real market cap. And now I learned that that's not only is that not the real market cap, but because this thing is appreciated so much, the real market cap is probably up around $11 billion. But hey, that's the fun in investing. And honestly, if I don't put a line in the sand, I don't get into the kind of details to uncover these details without doing so. And whether I bought at a high price or I bought at a discount price, honestly, this was one of those stocks that I couldn't really go on without owning it. It's just something that was important for me to own, and it's okay to have a few of those in the portfolio. I do a system-wide sales analysis, and I thank Dutch Bros for providing this data. I break it down here. System-wide sales are 687 million, but you can see franchised sales are 442, company-operated 244. And so what's so interesting, though, is I actually have the number of stores franchised and company-operated as well below. You can see company operated, they have 182 stores, 259 franchised, but they, in terms of sales per store, they're doing 1.34 million at the company operated, but 1.71 million franchised. And so I'm just saying that it seems like the franchised are being actually operating better than the company owned. And so is their strategy of going more company owned the right way? I don't know, but maybe in the future they'll refranchise it like McDonald's at some point anyway. So they'll have options. Anyway, on revenue, again, this isn't the same as sales. You can see revenue, that's why company operated is so much higher than franchised, because franchised revenue there is just their kind of franchisee fees. Now, you can see the shares outstanding. I do a little analysis over there, class A, B, C, D. They get different types of votes. Basically, their CEO has 74% of the votes. And so they have 165.1 million shares. And I'm not going to get into it in the video today, but the CEO and his brother, may he rest in peace, the brother, have a interesting story about how they founded this company. You can read all about it online, but I love the culture and the hard work that went into creating this company. Now, what I did is, because earnings on something like this are so darn difficult to analyze, I was just trying to get a sense of market cap versus system-wide sales. And so when I was originally analyzing this, before this thing appreciated so much, I think that market cap to system-wide sales was in like 3s or 4s. Now it's at a 5. Based on Yahoo Finance. But if I actually look at the real market cap, that 11 billion, and I divide by system-wide sales, this thing appears to be trading, and this is trailing sales based on 2020, it appears to be trading at 16 times sales, system-wide sales, at company operated and franchised. And so this thing is expensive right now. There is no doubt about it. I think they're going to grow at an extreme pace here. And I think within 3 years, probably the current stock price will be warranted. And I'm fine with that. 50% gain over the course of 3 years in terms of capital appreciation. That's all I ever expected. I just didn't think I'd get it in the first 18 days. Am I going to sell here? No, I'm a long-term investor, buy and hold forever. So if it goes all the way back down to the IPO price, I just don't care. I'm here for the long term. I want to see where it's at in 20 or 30 years. And I think it'll be a Peter Lynch style 5 or 10 bagger by then. It's a really special company, and I think they'll continue to grow. But what I also want to share is a comparison with Starbucks. So check it out right now. Starbucks, I had to back into a lot of this data, but is they didn't provide system-wide sales. But I have these guys at Starbucks at 114 a share. Their market cap is 135 billion, and so it's 13 times the size of Dutch Bros. And they have about 51% company-operated stores, 49% licensed. They don't provide a system-wide sales analysis like Dutch Bros. I hope they do in the future, so I had to estimate it. The way that I estimated it, honestly, was assuming that franchise stores and company stores operate at the same level of efficiency. I don't think that Starbucks franchise stores are operating at higher efficiency than company-owned, because a lot of those licensed stores are like at a Target, for example. I just don't see those doing the kind of production value of a full-fledged Starbucks standalone store. And so anyway, I assumed that the sales efficiency of those would be similar. And so I get system-wide sales when I backed into this number of about $37.5 billion. $37.577 billion. And you can see the revenue below. Company operated 19 billion revenue, licensed only 2 billion. But again, those are their franchisee fees. That's why it's so wacky. Now, I did a market cap to system-wide sales. And again, I'm really back into this. I don't know if this is the right number, but I got about a 3.59. And so that's to be contrasted with Dutch Bros at somewhere around 16.54. Now, Starbucks, again, I may be way off. It may not be 3.59. It may be as high as 5. It may be as high as 6 or even 7. But it's not Dutch Bros up at a 16. And so Starbucks also, though, is not growing as quickly as Dutch Bros. But what I wanted to say with all of this analysis is a few things. It's okay to put a line in the sand and buy a stock that you love and that you believe in. This is a growth story for me. 2, it's okay to do that even with incomplete data, because once that line is in the sand, you're going to learn more. And I learned more about this since I bought it. I would say it's kind of just luck that it's gone up since I bought it. It doesn't make me a better investor at all. Long term, do I believe this company is going to grow? Oh my goodness, absolutely. And do I think the margins are going to be there at the level of Starbucks or better? Absolutely, because how could it not, given their overall business model? And so I think now it's going to be land grab. Let's see these guys go out there. Well, I'll check back with them in 5 or 10 years. But for the next few years, I wouldn't be surprised if the thing goes back down, because it is trading at a pretty high price, a very steep price. But I also think investors these days, they're hungry for growth. And this is one of the companies out there that's showing extreme growth. And the product is amazing. I don't know what they put in it, to be honest. I don't know how they do it, but it's like drinking just like you got to try it. If you haven't tried it, it's you'll be hooked on that Dutch Bros. It's amazing. So anyway, put in the comments below what you think about Dutch Bros, what you think about IPO stocks. Go ahead and smash the like button if you enjoyed today's video. I know it's a little bit different than my traditional dividend stock analysis, but I wanted to show you another side of what I do from time to time and why it's so difficult to invest in IPO stocks as compared to dividend stocks, and why dividend stocks honestly are always going to be the foundation of what I do, and IPO stocks and riskier stocks is just a small sliver of the pie for this very reason, but it makes life fun and interesting. And so don't forget to subscribe as well. I have more videos on the way, and check out my Patreon as well. If you enjoy these videos, I have 49 more of them on Patreon, 49 bonus videos that you can unlock instantly. All right, everyone, before I leave today, in terms of a full disclosure, I am long Dutch Bros, ticker BROS. I'm long Starbucks, SBUX. I am long McDonald's, MCD. I am long Alimentation Couche-Tard, ANCUF, I think is the ticker, if I remember correctly. My wife is long Target stock, ticker TGT. We own those stocks in our personal dividend stock portfolio. All right, everyone, before I go today, in terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. I'm just sharing my journey for fun and entertainment. It's possible to lose a ton of money in the stock market, especially with a volatile stock like this. It's just crazy what's going on. All right, everyone, I love you all. I hope you have a wonderful day. I'll see you in the next video.